Hello there, it is time to look at the binary options trading with one of the most important oscillators of all times, the relative strength index. From my point of view, there is no other popular indicator like the RSI. Every trader in the world knows about it and at least one time looked at it. If you go and Google and search the internet for the usefulness of the relative strength index, then you'll see plenty of interpretations and so on. But trading binary options is a bit special. It's not only about trading with or buying or selling something as a financial product, but it is buying an option, either a call or a put one, and adjusting the time frame or adjusting the expiration date to the time frame in such a way that the option expires in the money. Let's look a bit what the RSI is. This is the euro-US dollar on the hourly chart. It is one of the most important, not the most important, it is the most important currency pair, the most liquid one. And this is a blank chart. Let's apply the RSI. Let's go and take the RSI. As you can see, it comes with the 14 period. This is the period 14. It means that it considers the previous 14 candles. If you zoom in, look at the candles, these are the candles. So the current value of the RSI that you see here will be plot, or the RSI will plot the value after 14 candles. Now, because of that, it is said that the trust or the decision to trade should be taken based on what the RSI or the oscillator does and not the price, because price plots the value based on what the current candle will do, while the RSI plots a value based on what the previous 14 candles did. Now, of course, when it comes to technical trading, everything can be adjusted. Namely, we can adjust the values or the periods for the RSI here in various ways. We can consider a bigger period like 200, and the indicator will plot values here based on the previous 200 candles. But the bigger the number is, the flatter the RSI will be, and its usefulness will not be, or it wouldn't be that useful to binary options traders as well. Now, for the standard interpretation, the RSI comes with two interpretations. Let's go here and click a bit on the edit indicator. Let's add some levels. 70 will be the first level. Typically on the MetaTrader, for example, this is not the MetaTrader, but on the MetaTrader you will have the 70 and 30 levels as default for the RSI. And the RSI shows only positive numbers. It's impossible to have an RSI on a negative number or an RSI that will move above 100. So the values are between 100 and 0. And the standard interpretation for the RSI is that everything or any value that the market forms, any value that the market for any print that would be above 70 level, above the 70 level, is considered a possibility to go short. In our case, a possibility to buy put options. Why? It is a possibility to buy put options because that's considered an overbought territory, and the market is supposed to move to the downside. So overbought territory, namely, this would be a great place to buy a put option. Then look at the market dipping, wait for the market to come back below the 70, look at the time frame, hourly chart, adjust giving an expiration date for the end of the day. Don't be greedy, end of the day is good enough. If this one, for example, let's put the OHLC, if this one came at, let's look at the time of the day, at 1 o'clock in the middle of European zone, therefore 1 o'clock here, and then waiting for the end of the day for the market to move lower, and you'll have your option expiring in the money, or maybe even end of week. It depends very much on the time also during the trading week. But that's one way to trade with it. Of course, when the market hits the 30 level or below the 30 level, that's a great opportunity to go long or to buy a call option, respecting, of course, the same principle that we discussed earlier, namely the expiration date. So 1, 2, 3, and even 4 possibilities to trade call options with the euro US dollar with the standard interpretation of the RSI. Now what's wrong with this picture? Because this is something that every trader in the world knows, but yet most of the traders fail in their endeavor to make money on the financial market, at least most of the retail traders. So what's wrong with it? There is a catch, as always. This approach, buying call options in oversold territory or buying put options in overbought territory, works only when the market ranges. Because when the market is in a trend, or not necessarily a powerful trend, but simply when the market is in a trend, then you will see that you will have a very difficult time for the option to expire in the money. Because the RSI will stay in overbought territory for quite some time, tripping stops, options expiring out of the money, or will stay in the oversold territory as well. Therefore, the key to trade with this approach, with the standard interpretation of the RSI, is to spot range markets. Namely, you can trade a currency pair or a product that mostly ranges. Some crosses range, not really major pairs that have the US dollar in their components, but some crosses like Australian dollar, New Zealand dollar, Australian dollar, Canadian dollar, and so on. They range not on the hourly chart, but on the 4-hour chart. They range, and you can use this kind of interpretation. If, of course, the binary option broker gives the opportunity to trade those markets. Another trick will be to go on the lower time frames, to go on the 5-minute chart, and simply, let's hope that this one loads, and simply look for the Asian session, because if you looked at the Asian session, most of them show a range. So the Asian session shows a ranging condition, and therefore we can use it to trade ranges. How to trade ranges? With the overbought and oversold levels with the RSI, or as a matter of fact with any other oscillators. But if you look at one, then you could interpret the other ones in the same way. So when did the Asian session started here? Well, this is the start of the London session, probably, let's see, this is what, 6:30, not really, this is the start of the London session, and the previous Asian session started somewhere around here. Alright, so this is the Asian session. It took, and I simply look at the previous Asian session, but this is valid for most of them, by the way. So for the RSI, we want to buy call options or buy put options based on the standard interpretation. Why? It is expected for a range to form. So put option here, call option here, another put option here, and then you have 3 possibilities, 2 out of 3 expiring in the money, maybe even this one expiring in the money, or maybe even this one expiring in the money. So 3 out of 4, as being a 5-minute chart, you don't look for bigger expiration dates, but something like 1 hour or maybe 2 hours expiration date, because we trade a limited session. That's the key to identify a range. Another way to identify a range is to go on the economic calendar, and the trick is to look at important events ahead of the market. For example, non-farm payrolls in the United States. It comes every first Friday of each and every month. But in doing that, most of the major pairs, the dollar pairs, especially euro US dollar, will range until the Friday is released. So it will go into overbought territory, oversold territory, and so on. So it gives an opportunity to trade a binary option with the expiration date prior to the release, because no one wants to take a chance. So chances are that a range will form. Now, how to trade binary options with the RSI when the market trends. That's the object or the subject of our second part in this RSI explanation. Stay tuned for the second part, please.